We're going to try and keep this a bit less official or whatever. I see it as more of an open talk. All right, great. Thank you, distinguished guests. Let's start with a really brief introduction of who you are and how you got into this wacky space of Web3. I'll start. My name is Itai. I'm with Market Across. We are a marketing and PR agency, as Serotonin is as well. I'm based in Tel Aviv, Israel, and we work with some of the bigger companies in the space and are happy to be part of Zebu Live's, I would say, ecosystem. Tell us about yourselves, please.
Sure, I'm James. I work for Crypto Valley Exchange. We're building a futures and options clearing settlement trading platform on Arbitrum. I've been doing derivatives and trading and algos for far too long, back into the late 90s. So I started with a colored jacket, waving hands, Chicago and London, and then was part of the very, very first algorithmic trading platform that was built anywhere and sold commercially. So I was an architect for that. And then I've worked on Wall Street with some of the really big guys, came into crypto in 2017, did some big ICOs during that sort of time, did a whole bunch of stuff in poker, and then I've been building this platform with my business partners and some big names in the VC space for a couple of years, and we are this close to go live, just like we'll put our announcement out.
You're in the alpha stage, you're getting some alpha.
Yeah, very soon.
Very cool.
Hi everyone, I'm Nick. My business is called Olivia AI. We're an AI business that provides AI agents to perform actual functions and tasks in the real world.
Business models, real use cases. What are you doing here?
Yeah. So we've also, we provide that AI to a number of crypto projects, and we're about to launch our own ecosystem token with some utility tokens with AI built in that actually performs real tasks for traders, projects, and developers.
Very cool. Shawn?
Hey guys, I'm Shawn. I work at Orbs. We kind of call ourselves an L3 for on-chain trading. What that means in practice is, we have some cool protocols that we partner with DEXs with, advanced order types, perpetuals, and that sort of thing. I've been in crypto since 2018, and I have no Web2 experience, so I've been doing it live as I kind of go along here in this space. It's been a lot of fun. So thanks. Happy to be up here, guys.
Perfect. All right, let's dive into it. So actually, we have a very eclectic background here, and I think we have the ability to actually look at questions a bit wider. So the title of the session talks about AI and trading. Two sectors, and again, we're in the world of digital assets, I guess, talking about that. So AI is supposed to change everything and whatever. Why is that more apparent in trading than, let's say, healthcare, customer service, or whatever? And is there specifically something inside digital assets, maybe the fact they're on chain or whatever, that makes this industry even more lucrative or interesting for AI in the trading sense? What are your thoughts?
Sure. The main reason I think everybody's looking here is because the return on investment is so much higher. So if you look at the biggest trading firm that we've got in London and sort of the impact that it has across both crypto and traditional markets, it's a company called XTX. And they share space with DeepMind. And they've been doing that for a very long time now. They're hiring from the same pools of people. They know that they want to optimize on these models going forward, that it gives them a better alpha for return than anywhere else. So every single traditional markets player and every single worth its salt sort of larger scale trading house in this space is building out models to be able to understand their data and do something better with it.
Proprietary closed AI.
Proprietary closed AI, but every single time something like happens, somebody leaves, they go, this is a good idea, they build it, they commoditize it, it gets normalized. Digital assets drops the barriers and makes stuff more accessible. Not the whole problem, but makes a lot of it more accessible so this can be done more broadly.
Thoughts? Why AI in trading is more interesting than not AI in trading?
I think, honestly, I don't have too much insight into AI, like what we're doing at Orbs. Like we don't have much intersection for AI. I will say in general, like just kind of echoing that you do have more, I feel like there's more alpha like here in the space, like in terms of how liquidity is structured across chains and how it's fragmented. There's just more, I think, opportunities for AI models to take advantage of some of this fragmentation.
Because it's hard for a normal person to look already and see that DEX has that right now with that chain and that whatever. It's too fragmented. Okay.
Exactly.
I think AI is just we have this debate before. You know, I come from the real world more than crypto, and I'm sorry to keep calling it the real world as if crypto is not the real world. But you know, we provide AI solutions to businesses to perform specific tasks, and most of the businesses that we see can do 100, 1,000 times more without headcount. You know, it can perform stuff quicker, more efficiently, doesn't forget. Okay, it's not completely without its flaws, but we're seeing businesses grow to 2, 3, 4 times their size without growing the headcount 2, 3, 4 times the size. So, you know, we've a specific tool that can generate social media content at scale. And so Julie in the corner that used to create social media content for this business can now drive that AI and do it in an hour, and she can spend the other 39 hours.
So let me challenge what you're saying, though, because
Go for it.
So there's a problem, I think, with believing in those types of prompts and models, because the issue is that it's very short term. So let's say ChatGPT and content. Everyone's like, oh my God, it's amazing. There's already off the shelf, and it's going to be integrated into Gmail. There's going to be Chrome extensions that show if the content was written by AI, and then it will block it. So social media created prompt content. It seems like a cool thing, but then Facebook will pretty quickly understand that that's AI and will shut it down or will ruin things. So
let me give you
when AI is commodified, isn't its secret sauce just kind of ruined at that point?
It's kind of like saying that about the internet or electricity, right? AI is an all-purpose technology that can be used in trading, in healthcare, in parcel delivery. Like, we're building a piece of tech at the moment. So my mum, unfortunately, she's in a care home. But before she went into a care home, she lived on her own. And I would call her, and she would want to talk to me for 4, 5, 6 hours a day. And it's the same conversation, you know, unfortunately, a little bit of dementia. And we've built this AI tech that can replicate my voice. It knows that her husband was called Arthur, the dog was called Thumper, I'm one of 3 children, and it can have that conversation with her for 6 hours if she wants to. Now,
That's some dark shit.
I'm not saying that is, and people will agree or disagree whether that's normal. I can still call her and spend the 20 to 30 minutes in my day that I've got, but I'd rather give her that as the utility use case for AI. We've hardly scratched the surface. We're talking about trading and crypto.
Yeah, so we're going to get now to trading a bit. So, did some research. The global only derivatives trading market is about $500 trillion. The crypto derivatives market is $2 trillion, and our spot is maybe at 4 or 5. So we all think that we're all big and we're so excited about what we're doing. But when it comes to like the larger scale, as you said, the institutions, we're a tiny promille of what they're doing. Why do you think that is? And why do you think that AI might help bring that influxes that we're looking for?
Sure. So 500, I think, is quite a serious underestimate as well. It's probably
I went
pushing a quadrillion now.
Yeah, I went on the lows of the lows.
FX swaps alone is probably 500 trillion.
Yeah.
The marketplace in crypto is trading roughly 1-to-1 with spot, 1 to 1.5. Almost every other asset class on the planet that's got a derivatives market trades at something between 50 and 25 times spot in volume terms. Crypto is, this is not going to be true, but for all practical and sense purposes, it's true, the most expensive thing to trade on the planet.
That's interesting.
I've got friends who run exchanges in sub-Saharan Africa. I've got friends in Indonesia who run metals exchanges. Every single one of them, for the notional value of what you're trading, is cheaper, and it's a lot cheaper. If farmers selling their wheat through antiquated systems done on paper with banks that are having to lend and check credit can get cheaper rates than we can, we should be able to do it as well. The main issue, and I'll try and be really brief, the main issue is perps. Perps don't work.
Perps is perpetuals.
Perpetual futures don't work. They are the dominant thing in our space. They're expensive from a market maker's perspective because they can always be squeezed against you. They're expensive from the amount of collateral you have to put up because you can't produce like an initial margin offset. You can't just present the amount of cash for your whole portfolio. You've got to do each one separately. And they only really exist because all of these entities got themselves regulated as payments companies back in 2016, 2017, and discovered that because they were regulated in this country as a payments company, they're not allowed to offer futures because they're banned from it. And they did that all over the world. So perps wasn't mentioned, and now we see around the world as people are going, oh, and perps. They're banned from launching those as well. But they weren't mentioned because they're a rounding error, because they don't work, and they're really capital inefficient, and market making therefore costs a fortune. So we need something better. We just need to take what everybody else has done.
So Orbs does a lot of things around perps. What are you guys looking at the market at that?
Yeah, I can provide some insight. I can't provide insight as elegantly as you can in terms of the global market, but in terms of the on-chain, which is what we're working on, we have a protocol Perpetual Hub where we're kind of building the framework for hedging and a price oracle as well as liquidations. And what we're seeing is like the biggest thing is like getting the liquidity on chain, like still. Like the funding rates are like seriously welcome.
Welcome.
Train.
It's all good.
Yeah. So the funding rates are a big problem. So getting more liquidity on chain is like one of the biggest problems, and also like getting and making sure like that traders have the amount of information available to them, and the same kind of experience that they can have as they can in the global markets.
Please, fashionably late, give us a 30-second introduction. Do you need a second? Do you want us to get back to you in a minute?
I'll be all right.
All right.
Glen Goodman. I was a TV correspondent for the BBC News and then for ITV News, mainly business and politics. Got to interview Boris Johnson and David Cameron and Theresa May and people like that.
I won't hold it against you.
Yeah, was trading at the same time in my spare time, and then had a big breakthrough in 2008 with a big collapse. I shorted all the banks, and that was featured in the Times. And then I gave up my job a few years later and became a full-time trader. Discovered crypto around the same time. This is about 10 years ago. Got a book deal and wrote a book a few years later called The Crypto Trader.
I love how you're late, but you only have more than all of us in the panel. Love it.
I'm older than you, that's why. Wrote a book, The Crypto Trader, and became a bestseller and translated into various languages, and I've just written this, the second edition is going to be published next year.
Perfect. All right, cool. Go buy it. Call to action. Link over there. So getting back to what we talked about, we're going to get and loop you in a second. So the biggest volumes in the world in trading are not in spot, they're in perpetuals or in derivatives, all these different things. We in crypto, as you're saying, maybe I don't know if it's a bug or a feature, but it could have been capital inefficiency. It could have just been a legislation issue, but we started with spots. I understand that. How do we see the crypto market if it's the private people or maybe it's retail? So it could be that we're really based on retail. And you tell me, I don't know that. The retail traders in Web 1 or 2, are they touching derivatives or in perpetuals, or is it more of an institutional?
So it's really dependent on the country. So you get different cultures in different places. So if you go into Korea or into the Netherlands, particularly India right now, you see lots of options traders. And you wouldn't really think about that here. Maybe in Israel, I don't think you'd think about a lot of options traders being there. So you get different cultures in different places. Futures is available in many, many, many places. It's become very regulated in a lot, so the only way to access it is through a broker with quite a lot of clearance to access that. So we do see CFDs, but they're really in gambling markets, and they're the closest thing to a perpetual that exists somewhere on a mass market scale. There are lots of little patches of them in other markets, but the average retail person using those is a loser. It doesn't work for them. They are gambling for a reason. The house always wins.
It's giving bazookas to 16-year-olds.
It's not. And then there's loads and loads of protection about how much you can lose in one day and all that type of stuff. So this is a very easy thing to implement on chain, but it's also expensive. If I'm a market maker and a perp platform, any one of these perp platforms comes to me and says, "Can you make a market in this?" And I look at it from a perp's perspective, and I look at my risk. It costs me so much money to have that there, and I'm going to lose a lot, that I say, right, can I charge you, the protocol, $100,000 a month as a market maker to be able to make this market? And basically, I burn down their treasury until that's gone. I step back out and the market's done. And we see that cycle again and again and again across this space. And it's only going to get better when we have protocols where the market makers are making some money out of the base of it. And that's what it needs.
So I want to ask you two: how do we get retail crypto investors to be a bit more intelligent or a bit more savvy? Because it looks like right now what we're doing is trading stuff and swapping stuff. But it's I think that exchanges say that more than 60 or 70% of trades in crypto are immediate. So it's like swap or market trade. We don't even do limit. It's just like I need to buy right now, whatever the price is. How do we get users to be a bit more intelligent and use a bit more advanced tactics? Because I don't think that a stockbroker would almost ever put a market order inside, his terminal.
Well, I mean, I hate to say it, but I think the problem is, as usual, regulators. So in the UK, obviously, we have a particularly awful situation in that regard because the FCA hates crypto so much that it thinks that even Bitcoin doesn't really have any kind of fundamental basis to value it upon. And so that's why they banned crypto derivative trading for retail traders outright. And what that means is that, you can go on the platforms you were just talking about, IG.com, CMC Markets, not any retail trader, but you have to answer a few questions to show you've traded shares before or whatever. You go on those platforms, you can trade them like little illiquid shares, little AIM shares, and you can trade them with leverage if you're a retail trader. Can you do that with Bitcoin, which is far bigger and more respectable, I would argue? No, you can't. So there's a real kind of mismatch. It's like they're still living 10 years ago when I first discovered Bitcoin. They haven't yet got their heads around what crypto is all about and what gives it value.
Okay. What do you think? How do we get people to do more?
I just wonder how many retail investors want to invest in that kind of thing, and most...
Well, they want returns. They just need more tools to give them returns because the current is a bit of a casino. Spot trading on digital assets is you can't have a strategy. You can't go and say, all right, this is what I think about it. If it goes this, it goes that. I'm just looking at my phone. Is it up? Is it down?
You can have a strategy. Of course you can have a strategy. And AI can help you have a strategy, and you can copy trade, and you can follow other people's wallets, and you can have a strategy. We talked about this earlier. Yeah. You and I could get exactly the same information, and you and I could stake the same amount of money, and you could end up 100% up, and I could end up 100% down.
So autonomous agent might be the way to help users get into more, I would say, advanced trading mechanisms, because maybe that autonomous AI agent would be looking at, international conflicts and how they affect macro prices. That's one agent.
I think if we're bringing it back to AI, AI has the ability to assimilate more information more quickly than any human can. And so how I use that may mean that I lose money, and how you use it may mean that you win. But
I'm one of the worst crypto traders in the world. If you could write a bot to trade against me, you'll be a rich man, so don't worry.
I mean, I heard a guy on stage, Raoul Pal, yesterday.
Yeah, he's one of the biggest podcasters in the world.
Yeah. His view is, most traders screw it up. He doesn't use the word screw, but I'm trying to be polite. But most traders screw it up because they try and do too much. And so, my strategy is completely different to your strategy.
So,
Can I just come back on that?
Sure, go for it.
What I would say from a sort of trader's perspective, and having dealt with tons and tons of retail traders who write to me and so on, I would argue that AI is going to transform trading, but more in the sort of informational side of it rather than the
execution.
I mean, sure, obviously there's going to be loads of AI execution eventually. First fund managers and so on have to get over the hurdle of trying to justify to their bosses why AI has made certain decisions, and the regulators are going to be very interested in that initially. But, somewhere down the line, once AI is doing trades, my experience from systematic trading for, 20-odd years, and my mentor who started systematic trading in the 1960s with punch card computers, is that you can design the best system in the world, but getting people to actually follow it and stick to it is unbelievably hot. And I'm not just talking about retail traders, I'm talking about professionals as well. Because as soon as the AI, you'll set an AI bot in motion, say you're just a regular Joe, you set it in motion, and eventually it screws up. Because it will, because it'll have good days and bad days, good years and bad years. When it has a bad year, they will immediately just go, there's something wrong with it.
It's like judging your ways on every exact turnstile. Be like, I think I should take a right here. You're like, well, go with the app. So I want to talk a bit about the fundamentals of trading in digital assets. So there's an issue of fragmentation. There's all these chains. I just saw a report that there's going to be, by the end of the year, more than 200 VC-backed L2s. All these L2s want more liquidity on them or whatever. How hard does that make intelligent trading? Like, again, pretty sure that in the more traditional market, I don't have to start thinking about, bridging this, bridging that. Can I even execute the trade? Is there enough liquidity in the chain? Is that a bug? Is it a bug or a feature?
No, you do in some markets. So if you did a load of stuff in power and gas trading in Europe for once, and that's massively bilateral with hundreds of counterparties, and price discovery there for a long time was very, very hard. It took a lot of trying to get people off the phones onto electronic systems to build it all out over time before that became something that can have some sort of efficiency to it. And as that became clearer and clearer, then that concentrated power, and a lot of people dropped out of what it was. And so this is the same here. We've got far, far, far too many solutions. And one of the reasons that we've got far too many is because there's not a lot of differentiation between them. There's not one.
Don't tell people.
Yeah. It's not, the differentiation is not big enough. It's not on the same scale. They're not solving the problems in a different way from each other fundamentally for us to go, okay, that's right. So we've gone down the tree. We've got tons and tons of evolutionary branches on it. We need to go back and see another fork from slightly lower.
How do you guys at Orbis try to deal with the fragmentation?
So we work with the DEXs themselves. So we integrate with the DEXs. And we try to work with some of the current the solutions that do exist now. So you have Li-Fi, which does cross-chain swaps. Rango is another provider there. And these are kind of on-chain solvers, and they try to search every in theory they're supposed to search every pool on every chain and try to find routes that can swap that are cheaper. In reality though, they just don't exist, because the barrier to bridge is just way too high in terms of prices. You're never going to have the chances anyways that you have a swap that's on Ethereum that's cheaper on Polygon, or even if you want to go to an L2 that's more gas efficient, it just doesn't exist yet.
Someone told me that it's trying to do all these things is trying to do business with an airport change as the bridge you all go to all the time. Every time you want to do something, let's just go to that change at the airport and meet there and then whatever. So it's a lot of capital and efficiency, that's for sure.
Yeah, definitely.
So how do you see, I would say, okay, let's put it this way. I want to talk about trading and then go back a bit to AI. We in crypto thought that we're going to, beat the banks and be a difference, and fiat is a different to whatever. Right now, especially look at sentiment analysis, we talked about that. It looks like crypto has just become a more volatile security inside the tech sector. So if startups will go up, then crypto will go up even more. If startups go down, crypto will go down even more. Is that ever, do you think, going to change? I'm going to ask you. And is maybe one of the reasons is because we're getting actually, we wanted institutions, and now, institutions act like institutions, and as part of their balance sheet, and they act that as more of a, I would say, speculative part of their balance sheet. And crypto is not actually a hedge. I don't do people actually use crypto as a hedge towards traditional markets? I don't see that actually happening.
I don't see it. Do you see it?
No, it's not.
All right, we can turn off the light. We're done. I'm kidding. How did that happen?
Because the narratives are always they always have a kernel of truth.
I just want to
to them,
explain again to what we just said. So originally, everyone thought that, Bitcoin, decentralized money, it's kind of insurance towards fiat. All these world leaders and central banks are going to print all the money in the world. So when that happens, next time we have crypto, and crypto is going to save us. I don't know if you saw, but through Corona and through also just a lot of things, we've had, kind of a second bubble. There's inflation, there's instability, war across the world, and right now, for the past few years, I think there's the correlation between, I would say, the S&P and whatever, and then all the crypto stuff is almost 1-to-1. We don't see any difference in activity, and that's kind of a very big, I don't know if surprise, but it's a bit of a letdown for a lot of what we thought this industry is supposed to be, which is an alternative.
Well, I mean, look, that narrative is still just about alive. It's still hanging on by its fingertips, the idea that, there'll be massive money printing and Bitcoin will be the new digital
it's not a
gold.
narrative. 70% of all dollars in circulation were printed in the past 10 years.
Yeah, exactly. All right.
Just live with that for a
I'm saying
second.
the narrative that Bitcoin will benefit from that is still just about alive, because actually the correlation between global liquidity, in fact, I'd be surprised if Raoul Pal, I didn't see his speech yesterday, but I bet he mentioned this, that the correlation between global liquidity and the price of Bitcoin and to some degree other cryptos is quite a strong correlation. So, but it's also a strong correlation between global liquidity and the stock market in recent years as well. So, really, you pump up the economies with tons and tons of money, and where does the money go these days? It goes into assets. So it goes into things that are considered risky, and that does, sadly, include Bitcoin and crypto and stocks. So, yeah, I mean, I've got to say, unless there is some unusual decoupling, which could happen at some point, because correlations don't tend to last forever. They do break down at some point, and a new narrative takes force. But unless that happens, I would not expect Bitcoin to be benefiting from, global...
A hedge. We're not hedging anymore.
If stocks collapse, I would expect Bitcoin and cryptos to collapse. That's what's generally happened, even in minor crashes in recent years. I would expect that to be the case going forward as well, unless, as I say, there's some unexpected decorrelation, decoupling.
It has a really interesting effect on bad news, that it goes very quickly at first, because it's a very accessible pool of liquidity.
Yeah.
And then it recovers slightly afterwards, because as people tap other forms of liquidity that they can use that maybe not giving them the returns, not as important to their portfolio, but weren't as liquid, they come back into those assets. If we're designing, all of this stuff is designed to be liquid. The more liquid it is, the more it's usable when you need liquidity. And if I'm building 36 LNG tankers in Oman or somewhere, then I'm not going to liquidate those when I need cash to cover my debt. I'll liquidate the stuff that I can liquidate, and then when I've sorted it all out, I'll go back in. So it's liquid, therefore it's used as a source for that.
All right, cool. Perfect. So, I'm going to one more question, then I'm going to leave questions for the field. So, all right, we're going to live in a world where AI agents trade against themselves. Everyone has their own or AI or proprietary AI and and all these like algos. Is there going to be room left for us small retail people, or are we just all going to be bait for all these huge AI machines are going to wreck us? Like, what is there going to be a world where machines trade with machines and humans trade with humans? Is that going to be a value proposition for exchanges in the future? Only humans here, no bots. Like, where is this going?
I'll just say quickly, because it's because I sort of referred to it earlier on, so I'll just sort of carry on with that quickly, which is that I think there will be a place for human traders, because human traders will reject AI when it disappoints them, and they will just give up their AI system, particularly small retail traders. Now, I think AI, high frequency trading has already...
It's not new, yeah.
It's not new, and we've already seen systematic trading dominating certainly in short-term trading, or sort of, second-by-second trading for many, many years now. I expect that to intensify as AI improves and improves. But, for the longer-term investing and trading, and when I say longer-term, I mean even, hour to hour rather than second to second, I would expect traders to try out AI, get scared when it doesn't do doesn't change the world for them and make them rich.
First, as you said, first time the AI loses $1, they're, oh shit, it's broken.
Absolutely. That is absolutely what will happen, because that even happens with systems that how they work. I've traded systems, and I know exactly where it's supposed to go in and out and why, and yet when it has a run of losses, I'm still questioning it, right? With AI, you won't even know why it's making the decision, so of course you're going to think it's just like it's gone mad, right? So people are going to eventually reject it, but there'll be a mix of what I just said.
I think it will be a hybrid model, at least for the foreseeable, and it's not necessarily that AI is going to do the whole thing end to end, but it might do my piece of research for me, or it might tell me in crypto terms who's talking about this token on Twitter, because AI
will be my analyst.
Potentially, yeah. It's going to be like we've already got a tool that can scrape the tweets of 20,000 crypto influencers and put those tweets into a database, and then you can query that database using AI. You can say,
but there's really smart people and there's really interesting honeypots. I'm going to give you an example. There's a market maker. I don't want to go into their names or whatever, but there's a pretty well-known market maker in crypto, and their wallets are doxxed. And then people started running bots saying, "Oh, when this market maker starts getting into this token in their wallet, I'm going to start buying it because there's opportunity here." And there are a lot of things were moving there. Then you know what people discovered? They started airdropping tokens into that wallet, and then those bots started trading those tokens. Like, oh, every time a token is on that wallet, so I'll just throw tokens into that wallet, and that's what we were talking about earlier. If I can see bots trading something again, then I just have to go a layer above and work on the bots. But
yeah, you have to watch for that kind of stuff. And we talked about earlier, 5 years from now, we'll look back and think, how the hell did people get away with this shit that was allowed to happen? But additional regulations are going to shut down some of that stuff. I think AI isn't going to do, for the foreseeable, as I said, the end-to-end, but it's going to do huge chunks of it for trade.
Any closing thoughts, or should we?
I'll just add that like back in the day, you used to be able to like arbitrage crypto like manually. Like now you can't. Really.
That's how SBF made his first millions. He was buying, Bitcoin in Kraken and selling them. It's called the kimchi premium. He was just selling it.
In the Korean market. So I don't really know what the future is going to hold. I think it's hard to tell, but I think there's a good chance that it really does like impact things more greater than people are expecting.
Hopefully. Definitely. All right, we got 4 minutes on the clock. We don't have. Oh, sorry, I was with the clock there. I apologize.
But
what? Oh, sorry, late. I apologize. All right, so we're going to ask our panelists to spend a few minutes in the back. Sorry, guys, we're a bit late on schedule.
Thank you.
Thank you very much, guys.
Thanks, guys. Thank you.